Ladies and gentlemen, I welcome you all to the H2 and FY25 post-earnings conference call of Marvel Decor Ltd. Today on the call from the management we have with us Mr. Ashok Pawan, Chairman and Managing Director, and Ms. Khwahish Pawan, Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended 31st March 2025, the growth plan and vision for the coming years, post which we will open the floor for Q&A. Over to you.
Yeah, good morning, everyone. Thank you for joining us. As you know, all that we are in process of transformation and in mode of the journey of 10x from 50 crore to 500 crore. So there are multiple things going on throughout the year. I would like to give you highlights of last year's achievement first. So in last year, we have shifted our sales and marketing office to Mumbai. Earlier it was, we were managing from the Jamnagar. We established one experience center at Mumbai in last year. Hired 20 plus sales people in the sales at Mumbai office for a domestic and the ROW. Started onboarding of architect interior designer in Mumbai and Pan India. Our team has started specified the product in the projects. So in this year, we have a good funnel is built for this year, in the especially for the project business. Appointed 25 plus new channel partner. We have launched Solis Motor, which is used for blinds and curtains. We have launched curtain track as well in last year. We have added new products, especially for the projects as well. We enter into new category of system integrator. The people who are doing home automation and office automation business. So this new category we have started from the last year. Now I would like to request Khwahish to say about the Dubai, especially for the GCC.
Hello, very good morning, everyone. I would like to highlight about the achievements that we have done in GCC region. So our overall achievement numbers as compared to the previous year have gone up by 19%. While this is something that is good on us, but we're also working, and this was last year was more of a foundational thing towards our 10x journey. And now we know that we're going much further on in the coming year. On the achievement other side of it, we have last year we've gotten 3 very good projects in 3 different verticals, which is the hospitality, commercial, as well as the healthcare sector. So all of these 3 projects actually helped us build a very
Khwahish, we've lost you.
Frontier, and now these projects are also actually helping us to get more projects. So this last year and this year we're getting a lot of new projects as well, and a very, very good funnel on the project side of it. So what we had spoken before on the project side, that we're actually forecasting a very good growth and everything, because that was a very untapped gap for us. So we see that now it is coming up quite well. Another thing that we have also done is the launch of Solis Motors here as well as in India. Here we have gotten a much better response on the Solis Motors, because GCC again is a very good market on the motorization part. So already since the launch, we have gotten our first big project of the Solis Motors, which is 900 motors in a hotel in Dubai, and this 900 motors is actually a very good amount of motors when it comes to the part of industry. So a very, very good achievement on the Solis Motors as well. We're working on specifying further more projects as well on this. Overall, on the total motorization part, before this year, we were completely doing Somfy only. But now with Solis and the launch of Solis, we already see the shift of Solis going to 30% of the entire motorization ratio. Apart from that, we've also worked on hiring sales team, because for the 10x journey, the people associated with us is the most important thing. And where we see that there are gaps which are to be filled on the project side, on the system integrator side, on the interior designers and architects side, we will definitely need people to get those going. So last quarter we started seeing results of it, and now those people are also trained and we're hiring also more people, expecting better results in this year. And this year we are expecting somewhere around a 20 to 30% increase in the upcoming year. Also, the plan for this year is on how we've seen the Experience Center of Mumbai. It is lovely all throughout, and we aim at something very, very good, just like the Mumbai Experience Center. We build something here as well. So we're working very actively on that, and hopefully by this year we can also have the Experience Center on board with us, so that we can actually engage a lot of very good potential clients on the interior designers, again architects, system integrator side of it, which will give us more visibility also on the brand perspective. And it will of course also help us attract good talent. And over and above, we are also strengthening our production capacity as well as quality. Why this is because considering this year we are expecting very good export that is going to happen with the US market and the other ROW market as well. So for that, we are already working on strengthening our production capacity as well. And lastly, but not the least, my sister, Miss Kushi Pao, she has also joined in as a management trainee. We've been actually wanting her and, foreseeing this for a very long time. So it's a very good and happy moment for us. And we are expecting her to shift within another 2.
Khushi, we've lost you again. Ashokji, would you like to complete that part?
Yeah, sure. So Qais was saying about Khushi Pao. She joined to Mumbai office last month only, and hopefully she will shift to Dubai within 3 months. So there, one more family member joined to the business that she was explaining. So now coming to financial part, there are two major things. One is revenue and other is EBITDA. So earlier we did 49 crore to 53 crore. So it was 8% growth in 23-24 and 22-23 and 23-24. So it was 8% growth. And last year we did 53 to 63 crore. So it is almost 18% growth. So and gross sales we did 71.15 crore. So the moment of the 10x journey is started, I can say, from 8% to 18% YOY difference growth. For the EBITDA, it was 5.9 to 7.15 crore previous year. And last year we did 7.4 from 7.14 to 7.56. So EBITDA amount wise is increased, but yes, definitely percentage wise it is decreased because of the all activities of the hiring a new many people in the sales and experience center and so many marketing activities we were doing. And hopefully the last year what we did, I'm sure that we will get the benefit of all those things in this year. As I said, the project business funnel is built up and all. So there are many things. Almost something was done within after 3 months, something 6 months, something after 9 months in last year. And even the first exhibition we started was in March 2025. So so there is a lots of things done from 2 months or 3 months or 6 months or something like that. So if I would like to go ahead with the planning, so I would like to say that of this year, so already started architect and interior to take them onboarding. So and this year almost we will onboard more than 200 architect interior in Mumbai and Pan India. Just we last month we did one exhibition, big exhibition for the home automation. That was for the system integrator, and we got the very good response in this exhibition. So this category, the new category, what we have added, I'm sure that this will give us a good boost in this year. So people will appoint, then the display kind of things will be settled down, the training will be happening in this year, and then business will start from there. Regarding the exhibition and events, so we have planned almost 20 plus exhibition and event in this year. So we just did in Pune, Ahmedabad, now we are going to do Surat. Before that we did Ahmedabad, Mumbai. So these 20 events for especially for the architect and interiors, and some for the system integrator, and some for the channel partner. So these are the plan in this year in India. We are hiring more people because we have noticed that as much as people we will hire, we are getting the good ROI from each people. Yeah, it will take 3 to 6 months to deliver result from them. So initially it will hit some expenses, but yes, for a long run, it will definitely add value, because as much as people we are having, those people can reach to the architect interior and channel partner and projects and all those things. As I mentioned that project business, we have started building the funnel. Our team has started specifying products in the projects. So that also, I'm sure that in this year we'll get the benefit of the project business. Regarding marketing, we are very in a good momentum to do the, especially for the digital marketing. So that is also going to increase visibility, brand awareness, and we are getting good leads from those marketing activities as well. Yeah, Quais, are you there?
Yes.
Okay. Okay, already you have told about this, what is going to happen in this year. So anything you would like to add into it, or yes, sir?
So, just when we're also looking onto the experience center side of it, we're also going to shift the sales and marketing office as well to Dubai. Again, on the visibility side of it, attracting new talent and everything. One more thing that has actually worked out for us in the previous year is the system integrators appointment. So this year we're going further more onto it, and we're going to create a separate vertical itself out of it. And altogether, we're also looking onto the marketing side of it. We're working on doing a lot more than what we have done in the previous year, and also very aggressively with Kushi also coming in and taking that marketing role. So I think we'll, once we have that dedicated person on looking onto that, that will also give us a good fold.
Okay, one more interesting things I would like to say to the all people that I have visited USA, and I was there for 20 days, and it was a very good experience of mine that I have seen the what is 32 trillion economic look like, and what kind of opportunity in the US market. So we are very passionate about to increase business in USA this year. And our ROW team has already joined us and joining us. So almost now there's 7 people who are working for the ROW, and they sits at Mumbai office from 8 p.m. to 5 a.m. in the night time. So in the daytime there's a domestic team will sit, and then in the night time the ROW team will sit. So I think this vertical will give us a very good boost in these years as well. And already the business, we are getting the business more and more from US especially. So in overall, if I would like to say that we are in the right way, right path for a 10x growth from 8% to 18% of revenue, and increasing EBITDA value-wise as well. And as I mentioned before that, the last year there was something we got 9 months, something we got within 6 months, and something we got 3 months. And the exhibition started from the March 2025 also. So hopefully this the fruits, what we have added new things in last year. Hopefully we'll get the benefit of all those things in this year. So I think this was overall things from our side. We can now start the question and answer.
Sure, sir. All those who wish to ask a question may please raise their hand, and we'll invite you to ask a question. In case you're unable to do that, just drop a message in the chat and we'll invite you to answer the question. We'll take the first question from Piyush. Piyush, please go ahead.
Thank you for the opportunity. Sir, your standalone revenue, that is for India, has shown some improvement from 28.8 crore to 33 crore this year. So how do you expect this to pace up, and what will be the key factors to drive domestic growth?
Yeah, so there is a 3 major things. One is architect interior, what activities we are going to do. We are already started, as I mentioned, that we did special event for the architects in Pune and Ahmedabad, and in entire year almost 12 to 15 activities we are going to do with them. So this is one. Number 2 is a project. So as we know that India is in infrastructure wise, and economy is going very well in India. So we are getting good funnel, good inquiries from the project as well. So I think number 2 is the project business, and number 3 is the system integrator, where our ticket size is bigger because the home automation or office automation, everything is a motorized and the high-end products. So those partners are joining us after we did the exhibition, especially for with them. So these are the 3 major factors in India, and hopefully we'll get good business from India from these 3 things.
That's great. And your international revenues, what will be the key growth drivers from Middle East and other global markets? And what steps are you taking for the same?
Yeah. So in Dubai, project business is good. Opportunity for us. Also, the system integrator. So we are hiring one head for especially for the system integrator from that community only. So that head will set up system integrator partnership with more than 100 people within this years in UAE and GCC. So that is also number 2 part. And then the marketing is quite told that there is a good scope to get the business from the marketing activities as well. And I'm very much passionate about the US business. So during my 20 days of US trip, I learned a lot. I really got what this country need. So something about the online order processing. They wanted the local bank account. So we established a USA company, and that is fully subsidiary company of USA. So last month we did that also. Bank account also open. So now they will get the material from the local invoicing. Otherwise, they have to do the import and import duty to pay, and banking they need to do by PayPal. The PayPal was charging 5% to them, and they need to do banking transaction by wire to Dubai. So there are lots of things I come to know during my USA visit. So hopefully we'll get good business from USA.
Okay, sir. Thank you.
Thank you, Pius.
Thank you. We'll take the next question from the line of Mronal Kadam. Mronal, you can.
Hello.
Mrinal, can you speak a bit louder, please?
Hello.
Yeah.
Yeah. Good afternoon. You're talking about going to 10x, but you are barely growing at 10 to 20%. 10x from FY25, that is from 63 crores to rupees 550 crores by FY by 2030. Means you will have to deliver almost incremental 80 to 90 crore revenue every year from here onwards. Doesn't look like you will be able to achieve this rate of growth, or if you can guide how will such a big jump come
Yeah,
in your revenue growth?
definitely. So last year we have not got that much months like we have raised the fund which received after 7 months of year ended. We have started experience center in April, but by doing interviews and onboarding to them, giving them training, so entire year we have not got. So something we got for the month of 1 month, 3 months, and 4 months, 6 months. So considering those things, we did 18% growth in last year, and this momentum I'm sure will be increased every year. So the people whom we have hired and the activities what we have done, example the funnel what we built for the projects. So those project business will get in this year. So this momentum every year, I'm sure that percentage of the sales will increase compared to the last year. So 2030 or maximum 2031, we are our goal is to achieve this 10x goal. So hopefully we'll do that.
Yes, sir. But please explain how will you generate additional 80 to 90 CR every year from here? From where will it come?
No, it is not 80 to 90 CR. I'll say that last year we did revenue growth of 18%. This year we may grow to 20 to 30%. Next year maybe 30 to 50%, 40 to 50%. So those kind of incremental mode will go. So I think you should wait for a year to come, and we are in the right momentum. And as per the planning, it is going on.
So then by when will you achieve your 10x target?
So we have target to 2030, 31 that we have set the goal, and we are into it.
Okay. I have one more question.
Yeah, please, Mona.
Against your margin indication of improving by 0.5 to 15 every year, we have gone down this year because of manpower addition and sponsoring events.
Yeah.
What do you think you can start achieving this margin improvements, because we will need to keep adding people and doing events?
Yeah. So if you the EBITDA value was increased compared to last year, but yes, margin is decreased from 13% to 13.2% to 11.8%. But considering those activities, I'm sure that we'll get benefit of last year in this year. And let's see, I think within a 6 month, we'll come to know more. But 10x the journey may always require to do such activities. So we are not in the way of the burning or something like that. But yes, definitely, it may this year maybe 12 to 13% we may achieve.
So then are you saying that margins will be where they are while we focus on growth?
Sorry?
So then you are saying that margins will be where they are while we focus on growth?
So I didn't get you.
So she's asking, will margins be where they are while you're focusing on growth?
Yes, absolutely. This year we have targeted that the goal of ours is 12 to 13% EBITDA margin to achieve.
Okay, thank you.
Okay,
Thank
thank
you.
you.
We'll take the next question from Lalit Rai. Lalit, you can unmute and ask.
Yeah. Hello, sir. Good afternoon.
Yeah, Lalji, very good afternoon.
Sir, so just a couple of questions. One is
Yes.
on the working capital side. You have a very large number of SKUs, and therefore you need to keep a large amount of inventory, especially on the fabric side. Now, while maintaining this inventory at around the current levels of 45-50 crores, is it possible to continue to improve inventory? What steps could be taken there? What kind of rationalization could you do?
Yeah. So if last year, if you see the percentage wise against sales, it is reduced. So let's say it was when we did 53 crore, inventory was 45 crore. And we did 53 crore, inventory were 50 crore. So if you look at the percentage wise against the sales, it is reduced. But is this product is based on the MOQ and with the 24,000 SKU and all. So as soon as sales will increase, the number of days of the inventory will decrease for sure. As it is, even last year we introduced new products, Solis motor, pattern track, and special product for the project as well. So those inventory we have added, then also this new product added, then also the percentage wise is reduced. So I'm sure that still we reach 150 crore or 200 crore. The rest, the look will be totally different in inventory side for sure.
All right, sir. And sir, Qayesh had earlier mentioned that you're seeing a lot of interest, especially in the UAE market, for motorized products. And I think, if I'm not wrong, she mentioned that we could look at motorized products contributing to even, let's say, about 30% of revenues in the future. So how much higher realizations do we get when we sell these automated and motorized products versus the normal blinds?
So generally, if we look into one blind, so there's one blinds maybe let's say if it is 5,000, and then motor will add 7,000 rupees. So it was almost a double sales value, and so motorization, whatever motorization will increase. So especially we were looking into this our ticket size. So maybe ticket size our is 25,000, but motorized this one, if the blinds are entire home is with the motor, so it is going to 2 lakhs also. So the system integrator, what we have talking about, this will play a bigger role to increase our ticket size. So hopefully this year we'll get this benefit at Dubai and India as well.
Sure, sir. Also, on the strategy side, I think now the numbers are doing the talking in terms of, the potential of a market which is already developed or for blinds, right? So UAE is proof that when you target a market which is already established and where you are able to offer products at about 30% cheaper than the market leaders while offering the same quality, you are able to grow much faster over there. So, is that the reason why you've decided to focus on the US and UK market, which are much larger, where you don't need to really go out and, create a market unlike India, where penetration levels are low and awareness is low, and so you're having to work through so many conferences and, other participants like architects, interior designers. Is that what it is causing this shift in focus?
I would like to say, instead of shifting focus, I would like to say that yes, the international business will be a bigger part for us. And the efforts what we need to do over there and get the businesses comparison is better than India, 100% for sure. So, but yes, in India, there's a different totally teams. So they are working on that way. And if you ask me, then definitely I'm spending more time nowadays for international market as well. And from there, we will get a good chunk of the growth. And you are absolutely right for that.
Sure, sir. And could you just remind us, in India, out of the final selling price, how much comes to you? The final selling price of the product, right? How much does the dealer keep and how much comes to you, to the company?
Yeah, so generally, if the price is 50, then 50 is to the channel partner, then it will be 100 to the end user. And from that, they will give the discount or something like that. And our cost is 40%. So gross margin is 60%. So this kind of channel is overall working.
Okay, sir. So are there any efforts on your part to kind of try to at least see on a pilot basis to go direct and have your own measurement guys and installation guys and see if you can go directly to reach the consumer directly, in which case you will get to keep a much larger share of this, right? So not only will you report higher revenues, but your margins can be a lot better if you're going direct to the consumers.
So I would like to say there's a all different channel. So one is a, let's say, dealer channel. One is a interior decorator channel. One is a project channel, and third one is a marketing channel, which we are reaching to the end user, to them from the company. So yes, that channel also already started from the last year, and hopefully this channel would do good in this year as well.
So, sir, as this picks up, that segment should contribute higher margins, right? Versus what you are seeing currently.
Yes, absolutely.
Okay, sir. And I had a question on the project side of the business as well. UAE, especially, you are seeing a lot of traction on the project side. So, and please correct me if I'm wrong, but let's say if you're trying to uh, get engaged with a hotel, right? A new hotel chain, let's say the Accor Group, and you find out that a new hotel is coming up and you go and pursue a business opportunity over there. So I'm guessing the first part will be more challenging, right? Introductions, reaching out to the right people, finally understanding how tendering or, getting a contract with these guys works. And then incrementally, it must be getting easier. So given that you've seen some traction already in UAE, on the project side. So are you now beginning to see that second wave where the first time around you put in, let's say, 10 effort to the extent of, let's say, 10 points, and now with just 4 or 5 points worth of efforts, you are able to get repeat business for the newer hotels or, other business with the same chain?
Yes, yes, it is already started. I think Christ will say more about it, that what kind of projects they did and what kind of reference they are using for to get the other projects. PC has a actual examples. So over to you, Christ.
Yes, so on the projects, we have done three different types of verticals in the last year. One is the commercial, which is the Port and Customs Authority head office of Dubai. The second on the hospitality side, which is the Ariana Hotel in Shobha Heartland. And the third is on the healthcare side, which is the Al Sharq Hospital. So now, while these three have actually given us very three different verticals on it, we're able to actually use the type of technical data sheets, we're able to use the type of gauging, also we're able to use the type of approval sectors and everything that were submitted already to scale up further. And also the team is getting very trained, right from approaching to, when it goes to the negotiation part of it, when it goes to the mock-up part of it, and also when it comes to the execution part of it. So this is not just helping on the revenue side of it, but it's also helping on the sales team side of it. And now they're also trained. So what you rightly mentioned, that before we used to, let's say, do 10 types of efforts, it is now closing in that 4 or 5 efforts also, for that matter. And or I would say right now it is going at a 7 or 8 type of efforts, and by the end of this year we'll go to that 4 or 5 efforts, and then we're able to close it very well. So that type of credential is actually helping us very, very good on the project side.
Sure. Thank you so much, Paresh. And sir, one last question before I get back in the queue.
Please.
On the growth side, so all the things you were saying, right? So funding became available only towards the second half of the year. First half, you just moved to Mumbai and you were practically, build the team from start over here. Must have taken a few months to put people into place, to figure things out. You started participating in these conferences and, reaching out efforts as far as market participants are concerned, different channels are concerned towards the second half of the year. So also with these motorized products coming, and you guys are envisaging that, these could get to 30% of revenues, and these are, significantly higher realizations as well. So it seems to me at least that you're probably guiding too conservatively when you're saying 20 to 30% growth. So you think there is a possibility you may end up doing much higher than 30%?
Absolutely, there is opportunity, a huge opportunity. But I would like to go ahead with the 20 to 30% right now. So better to do more than what I say. That I would like to go ahead.
All right. Thank you so much, sir. Thank you for your time.
Thank you, Lizzie. Thank you so much.
Thank you. We'll take the next question from Vinay Ambedkar. Vinay?
Good morning. Can you hear me, sir?
Very good morning. Yeah, very good morning.
Sir, just to dwell a little bit on this inventory, because that is a sizable quantum of our balance sheet. Can you throw some broad light on what is the aging of the inventory that we have in terms of, let's say, some we are holding for less than a year, some we may be holding for more than that. Do you have any rough breakup of that?
Yeah, I would like to say a few things. So I think this will be help to everyone. The first thing is, this is fabrics, most of them. So fabric never get damaged or something like that. So it will be, there is no any loss from the inventory. But yes, there is a 500 linear meter process we need to do the produce this fabric. So if there is the product which I need to keep, because there is a challenges in interior designer. So if their theme wood green or wood orange. So those products we should have. So that's why, and when you are going to the internationally with the brand, then the product range should be very huge. So that is always you need to keep when you want to fight with the giant people. So today we have the largest range, and that's why we are selling our product in the US with our brand Callistus only. And Dubai, what we did within the 5 years, the sales of the Dubai is bigger than India as well. So this is the strategy for the inventory. But so some product may with the MOQ, it will finish within 5 years, then 3 years, then some other 1 year or some 3 months. So how it is sales will increase, the inventory will the percentage wise it will reduce. So there is a best example in last year that the previous year 53 crore sales, and against that inventory was a 45 crore. And last year 63 crore sale and inventory were 50 crore. So if you see the percentage wise, it is reduced against the sales. Number two, even though we have added new product like Solis motor, then cut and track, and some few product especially for the projects. So by addition of those product, the inventory percentage wise against sales is reduced. So I think we should wait till we reach to 150, 200 crore, and then balance it will look very good in the inventory side as well, because this is a game of this business. So, and with this game we will win. Yeah.
Understood, sir. So, one key takeaway is that you mentioned that this stock is not damaged, I mean, not perishable. So, it is a high life fabric.
Absolutely. Yeah.
Okay. So, but at some point of time, would you realize that some of the stock is, let's say, slow moving, or it is unsold, or maybe, I don't know, going out of fashion or something like that? Do you review that periodically, or take some action on writing down the value of it or something like that? Do you take any actions there?
Yeah. So there is one proper cycle we have set that every 2 years, one catalog will renovate. So almost 30% product we may discontinue, and 30% product we may add on this catalog. So the 30% the product we have discontinued, we give them their discount, some discounts. But overall, if you see the entire things, so somewhere margin is let's say 150%, somewhere margin is 100%. So those kind of things, it's not affecting us overall, because this is a regular cycle going on. So if you see last 5 years, every year there will be something discontinued we sold. So after that, we have said the cost is 40% and 60% is gross margin.
Okay.
Yeah.
So if you're saying, let's say, ballpark, not to put a hard number, if you're saying 30% of the designs go out of fashion every 2 years, and if
Yeah.
you take 50 crore as the number, so that would be about um, how much is it? 50 into 30%, so 15 crore. And if 15 crore every 2 years, so let's say about 7-8 crore every year. So how much of a discount that you would sell it at in order to dispose that stock? Uh,
So this is happening only fabric. So fabric is a 50% part of kind of part of the inventory. So it is not the total 50 crore of the fabric. And
okay.
and discount is almost 3%, 5%, 10% somewhere. Those kind of discount we give. And more we do the incentive kind of things with the sales team, that they will push to sell this product. So in financial side, because there is a gross margin for us, the 60% gross margin is a average one, because there is
Okay.
gross margin is 70%, 80% as well somewhere. So after all this is coming to the 60%, so it will not affect to the total margin, because it's a complete cycle. Every year this is going on.
So it is unlikely that you may have to actually take a loss on this when you sell. Is it correct?
Yes. So 60% gross margin is after
Oh,
all these activities in throughout the year for always.
okay, okay, okay. But sir, I mean, this can you give an idea that let's say more than 3 years? Okay, let's say if it is not perishable, then more than 5 years, how much of the stock could be out of 50 crore?
So let's say if when we reach 200 crore, so I'm expecting that time.
Sorry, sir, Ashok sir, sorry. As
Yeah.
on date, as of March 25.
What do you want
Let's
to
say we
say?
have 50 crore stock we have as of March 25.
Yeah.
How much of that would be, let's say, more than 5 years old?
Ah,
We are
okay.
holding. Huh.
We don't have the I don't have right now those data on hand.
Okay.
But maybe 2 to 3 crore, maybe more than 5 years.
Oh, that's all.
Yeah, yeah, yeah.
Okay, okay, okay. And so, sorry, you said half of it roughly would be fabric, and the other half would be what?
So there's a components, plastic components, metal components, and aluminum channels. Those kind of product will be there.
Okay, and they are also not perishable.
No. So those products don't need those kind of bigger MOQ for 3 years, 5 years, and that there's always it's a running components.
Running component. Okay, okay.
Yeah.
And you have all this completely insured, fully insured.
Absolutely, absolutely, 100%
In
insured.
if any untoward incident happens, God forbid.
No. It's always fully insured, and even our bank also need fully insured. So we never compromise on all those things, because there is a small amount. We don't take risk of anything, and this is practice from last 15 years in the company.
Okay. Okay. So last point on inventory. This you mentioned 500 meter is a MOQ. Approximately what would be the value of that roll, roughly?
So there's a almost you can say 50 rupees square feet, so almost 500 rupees square meter.
Okay. Okay.
Kind of those kind of price of the fabric. So some
Okay.
fabric,
Okay.
yeah, it's
Okay.
like
Okay.
50 to 200 rupees. Yeah.
Okay, sir. Understood. Second point, sir, on working capital, we have seen some increase in receivables also.
Mhm.
Can you just throw some light on that? By when would they be recovered?
Yeah. So this is most of receivable increase in the Dubai. So and that was with they did a high growth and project, and we are now focusing on the ROW international USA market as well. So we have increased the stock level in Dubai, and because of that, it is increased. But hopefully, our banking will start in Dubai from this year. So will this receivable will decrease from this year.
Okay. So this 14 crore would be recoverable in how much time? 14 crore receivables. I mean, do we give a 60-day credit period, 90-day credit period, roughly something like that? Because I understand it is projects, and here we need to give credit period to these large hospitals and hotels and all.
Yes, yeah. So project is a one. We have increased the inventory in Dubai unit, and so as I said, that, we are going to take the banking facilities at Dubai. So hopefully, it will improve so well within last 6 months.
Okay. Sir, can you just this when we said that we have a good pipeline of projects in Dubai, can you give an idea of the amount that we are looking at and timeline for execution?
So when we say funnel in a pipeline, so
Ah.
So there is a not 100% you can get the business from whole funnel
Correct.
because there's other
Right.
competitor also joining to us. So almost in Dubai we are having funnel of 15 crore, and India we are having funnel of 10 crore. And this old funnel we are talking about for this year only. So and we are adding funnel almost every day and a month. So difficult to say
Okay.
this much amount will be from this funnel, but yeah, as Pais mentioned that what kind of projects we did last year. That was the first year for the project for us, and now they are getting good example. The UAE government has a shifted their custom house headquarter, and that headquarter done by us. So now wherever they are going and talking about this custom house done by us, and that was totally automation one. So it is easy to for them to go into it. So
Okay.
yeah, so I think
So
this year will be more excited for us.
okay. So the projects are short dated, short like tenor projects, like 3 to 6 months, or do they extend beyond that also? From the
Quite
time we get
can
it to complete. I know
yeah,
the lead time could be long because to get the project, but once we get the project and we start our work,
yeah.
is it like very
Quite,
quickly done?
yeah, Quite, can you tell me about the three projects what you did in last year? What was the journey of this project?
So the Port Customs house that we did what took us approximately 6 months to start executing, because we have to do all the approvals and all the mock-up and everything. While the one with the healthcare that we did, the structure and everything was already ready, the interiors and everything was already done. And after that, they came to a point that they want to do the mock-up and they want to do all the approvals and all. So that took us approximately just 3 months for that matter. So some projects may take, let's say, 2 to 3 months. Some projects may take 6 months, and some projects may take like 7 to 8 months also for that matter. But the funnel that we spoke about, all of them are for the year.
Okay. And so last question, how does this transfer pricing work between Indian company and Dubai company? Because Indian company would be doing bulk of the manufacturing, I assume, or correct me if I'm wrong, and then sending semi-finished parts to Dubai or something like that. How does it work?
So there is a very clear, transparent policy in the company that Marvel will take the margin what they should get to sell the calisters. So let's say the cost is 100, and to give to the Dubai to 120, because those kind of things count is a wholesale pricing, you know. So so that is not affecting us any transferring price, because there is a always there is a margin Marvel add and send to the Dubai.
So basically, transactions are at arm's length basis. You take your profits. I mean, India takes their profits, and
Absolutely,
then
absolutely,
that
absolutely,
120 that is charged to Dubai, they would add their cost and
exactly,
profits and all.
exactly. And also we do the invoicing to the Dubai, that whatever manpower are working for Dubai over here in India. So those kind of percentage we have fixed up that in sales, this kind of manpower is there. So every month we do the invoicing to the Dubai. So we are very transparently. Each company should generate their own profit.
Hmm. And in US, sir, once sales pick up, how do you plan to account for that? The costs and all. How will supplies happen? It will happen from Dubai or from India?
No, from Dubai only, because
Oh,
we most of this product we need to send to ship by courier, and Dubai is a better place to courier from
oh,
entire world. So
okay.
that will be done from Dubai only.
Okay. Okay. All the best, sir. This is very, very good to know that we are directionally on the right path. While I think this 10x is an internal aspiration and you want the entire organization aligned to it, so you have been vocal about it. But I mean, we are making a lot of these investments to be able to get onto that path. So
Yeah.
congratulations and all the best for that. Thank you.
Thank you so much, Vinay.
Just sorry, and just have a look at this working capital position, because it will clog our cash flows. So as much as possible, if we release cash from that,
Okay.
it will help our liquidity.
Okay, sure. Thank
I
you.
mean, this is like typically how a banker would look at it, sir. So
Okay, understood. Vinay, thank you. Thank you.
thank you, sir.
Thank you. Since that was the last question, I request the management if you have any closing remarks.
So, almost many things. Sorry, you are asking for the last question and then I today?
No, sir. The last question is done. Just any closing comments if you have.
Okay, fine. So, I would like to say, first of all, thank you so much to the everyone that participate very well and ask good question to, and we got the opportunity to say about all those things. In the closing note, yes, team is very excited and kind of culture we are building, that what kind of startup has a a spirit. So those kind of spirit we are building within the team, and finally the result will come from the team as well. So those kind of culture we are building. I'm sure that this year will be more focus on the people, deliver more and more, and very clear indication, or the you can say culture built is going on. So that's the 10x need the startup kind of energy. So we are hiring lots of young people and all those things. So very excited, everybody, for this year, and hopefully we'll meet again after 6 months to discuss more. And thank you very much once again to all of you. Anything from Paish, your side?
I think you've said most of it, so nothing else from my end. Thank you.
Okay. Thank you so much, everyone. Thank you.
Thank you. Thank you, participants, for joining this call. Thank you, the management, for your precious time. You may all disconnect.
Thank you.